Stocks are trading relatively steady on the eve of midterm elections. Berkshire Hathaway gets a ton of attention after buying back $1 billion worth of its shares. And the Trump administration has reimposed sanctions on Iran. What this means for crude oil, coming up. I'm Justin CCS, and this is Stock Talk Today. So first and foremost, let's talk about the elephant in the room or the donkey in the room, depending on your political leanings. We have the midterm elections coming up tomorrow, and what that means for the stock market is that we are kind of in a stasis, or things aren't trading as frequently or as explosively as normal, and we've had some fairly explosive days and weeks over the past couple weeks, in particular in October, and we're seeing a little bit more steady trades when it comes to the stock market, simply because nobody's really going to make predictions on what's going to happen tomorrow. All they are they're just waiting for the results of the elections tomorrow, and then decide what that means for the markets when that information comes in. In the meantime, we're just sitting here on predictions, and it just makes sense to just wait till the information comes in before you make a decision based on politics. Now, moving on to something that I actually want to pay attention to, that I think could actually assist in improving your ability to trade, is to look at the Berkshire Hathaway buyback that they just did. They literally sold $1 billion and then bought it back very quickly, and it got a lot of attention because Berkshire Hathaway is up 5% off of this, and it seems like they quickly made a huge amount of money very quickly just simply by purchasing back their stock. And that's actually very common. Buybacks are great indicators that the stock is healthy and that the company is great, because the company and CEOs and everyone are actually buying into the company themselves. So it made me kind of just want to do a little research on buybacks and buyback authorizations. And one blaring one stuck out in particular, and that was one that was authorized on May 1st. A $100 billion buyback was authorized by Apple to buy back $100 billion worth of its stock. Well, that was on May 1st. Have they spent all that money yet? No, they have not. They have spent only $29 billion of that back. So that means that there's another $79 billion sitting there authorized to buy back shares of Apple. And why is this such a big deal? Well, a couple of reasons. First and foremost, it's the size, it's the amount of the buyback. Berkshire Hathaway bought back just $1 billion and was up 5% on those results, whereas Apple has $79 billion just sitting there waiting to be used. And this is beautiful because of part two in this scenario, is that Apple has produced it's pulled back the last 2 days. It released earnings reports on Thursday night. Friday, it was very clear that it beat and met expectations, but it sold 2 million less phones than what they were expecting them to sell, and year over year they stayed even on the number of sales for iPhones. And what that indicated to the market was that it's time to sell Apple. Well, what we have now is the insiders sitting on $79 billion worth of cash to buy back the stock, and you have sellers, so the stock price is actually going down right now. So to me, this is a perfect opportunity to get in on one of the most iconic, biggest companies out there at a low, affordable prices, trading at around $200 right now. You get in on that in expecting, one, that you're buying into a great company. You're buying into Apple. That is a great company to buy into. But the timing right now is more important, and is important to pay attention to, because of the $79 billion that's still sitting there for them to use for the buyback. And it almost, and Jim Cramer implied this, as much as Jim Cramer can imply anything, is that this might have been orchestrated in some way by Apple in order for them to be able to buy back their shares at a lower price. Whether that's the case or not, the indicator is that Apple is a great buy right now. Moving on the bigger picture when it comes to buybacks, there are over 300 S&P 500 companies that have authorized buybacks. So this is something to actually pay a lot of attention to, because the nature of publicly traded companies is that they have to tell the public when they're buying back their shares or when they're selling their shares, which is a negative indicator. Now, since so many companies have looked to buy back their shares, it is something to pay attention to and perhaps hold or create a watch list based on these guys and to pay attention to them, because you will see quick, short to medium term bursts of growth after a buyback is announced. Okay, so that's something to pay attention to. So moving on from buybacks, what we also have going on today, and where you're seeing the most action in the stock market right now, is with your energy stocks. Energy across the board right now is up. Why? Probably because the Trump administration reimposed sanctions on Iran. And what this means is that crude oil, it basically, from a global perspective, it makes crude slightly harder to obtain, simply because of the countries that are trying to, or that get their crude oil from Iran can no longer. And there are, to be fair, there are 8 countries that are still allowed to get oil from Iran. And they basically, these 8 countries, which include China, Korea, India, Japan, and in particular, those 4 big countries basically have a waiver, and they basically have only a few months to where they have to lower the amount of oil to where they're not getting any oil from Iran, and they have some time to do that. But in the meantime, what we're taking a look at is the stocks and how they're reacting to that. And like I said, energy is up across the board. Crude oil is up just slightly. But there's something to pay attention here that's sort of a bigger deal, and that's when the United States was doing these sanctions back before 2015, when the sanctions stopped and the deal was struck with President Obama and John Kerry. We were not, the United States was not in a position to actually outproduce all other countries in oil. In 2018, that's a completely different story. All of those investments over the past decade and a half almost into fracking and into locating more oil in areas where they didn't think that oil actually was there in the United States. That's all come to fruition now, and you're even seeing that with crude in general, which is very markedly low right now, trading at around $67. So make sure to pay attention to the energy sector as these sanctions continue to move forward, okay? And that's it for news today. I'm Justin CCS with Stock Talk Today, and I'm here to tell you to have a good day.